You watched Bitcoin slice right through support, triggering your stop loss and taking a chunk of your capital with it. Retail traders see a broken diagonal line on the chart and assume the macro trend is dead. They sell their positions, expecting a massive crash. Market makers engineered this breakdown as a surgical liquidity sweep. A liquidity sweep forces price movement to absorb leveraged positions. Institutions push prices below support to hit retail stop losses, filling massive orders. Here, market makers drove the price straight into a cluster of stop losses, sitting precisely at the $68,000 to $68,700 zone. To stop acting as exit liquidity for institutions, you must see the market through their lens. That is exactly what we provide at Crypto Whale Radar. By the end of this video, you will possess the exact framework market makers use to engineer these fakeouts. Surviving the current crypto cycle requires completely discarding traditional support lines in favor of tracking institutional liquidity zones. We can observe this execution clearly on the 4-hour Bitcoin chart. This timeframe is the micro battleground where the recent drop was structured. The short-term support level that failed during the drop is now flipping to resistance, capping the price right at the $69,000 to $69,500 level. To map out where the price is heading next, institutions rely on a liquidation heat map. This is a visual plot showing exactly where highly leveraged retail traders have clustered their liquidation prices. This diagram illustrates how dense clusters of leveraged positions act as a magnetic pull on price action. The market is naturally drawn toward these bright pockets of liquidity to force liquidations. Right now, the data confirms that the $68,000 liquidity cluster has been wiped clean by the recent dump. Because this downside fuel is entirely spent, the immediate bearish catalyst is neutralized. The gravitational pull forcing the price lower has been temporarily removed. Bitcoin's volatility dictates the wider market. Ethereum experienced a violent rejection straight down from its crucial $2,400 resistance level. Simultaneously, XRP broke sharply below its critical $1.43 support line. This is the contagion effect in action. Bitcoin's liquidity sweep dictates the immediate directional bias and volatility for all major altcoins. Solana and Chainlink are caught in similar downward structures. Later in this analysis, I will detail a specific algorithmic recovery indicator that maps out their next probable moves. To calculate our next entry, we have to step back and analyze the macro perspective on the weekly and 3-day Bitcoin charts. These macro timeframes are currently dominated by a massive bearish divergence. A bearish divergence occurs when the asset's price continues to make higher highs, while momentum indicators make lower highs, signaling underlying weakness. Validating that weakness, the supertrend indicator on the weekly chart remains firmly entrenched in the red. We are operating in a multi-timeframe divergence. This is the core reason retail traders are currently getting chopped up. Macro indicators point down, while micro indicators point up. Looking at this split-screen visualization, the macro trend on the left is heavy and downward, but on the right, the 4-hour chart is forming an unconfirmed bullish divergence, where micro candles form lower lows, while the RSI momentum indicator forms higher lows. To confirm this micro bullish divergence, we need consecutive higher lows to lock in on the RSI. A confirmed 4-hour bullish divergence will only result in choppy sideways action or a slight upward relief. It does not possess the volume to reverse the macro trend. Traders are currently trapped in a danger zone. You are squeezed between a heavy macro ceiling and a temporary micro floor, requiring extreme precision to trade profitably. Trading within these conflicting timeframes requires a level of execution speed and safety that standard retail platforms simply lack. Navigating these high volatility liquidity sweeps effectively requires an exchange capable of maintaining order speed and safety, which is why professionals utilize BingX. Their matching engine provides the trading conditions necessary for professionals, allowing you to execute entries precisely and avoid the slippage that drains retail accounts. Utilize the specific referral link in the description below. This secures your exclusive partner bonuses and grants you direct communication access for trading assistance. Institutional-grade market data loses its functional value if the execution platform cannot protect capital during algorithmic volatility spikes. To ensure your survival against algorithms designed to drain your capital, hit the subscribe button to Crypto Whale Radar right now. Zooming out to the daily time frame, we have to analyze Bitcoin dominance, which measures Bitcoin's market cap against the rest of the crypto market. Sideways Bitcoin dominance means altcoins have zero independent strength. They are completely tethered to Bitcoin's upcoming volatility. The ultimate tiebreaker for our current timeframe conflict arrives with the opening bell of the U.S. stock market. Traditional equities, specifically the S&P 500 index, possess the sheer volume to override any of crypto's micro-bullish divergences. In scenario A, if the S&P 500 bounces on the open, that capital influx will confirm Bitcoin's 4-hour bullish divergence. The exact upside target for scenario A is a relief bounce hitting heavy resistance between 69,000 and 69,500. If that bounce extends, extreme resistance is waiting directly above at the 71,000 to 72,000 zone. In scenario B, if the S&P 500 dumps, macro weakness resumes immediately, entirely invalidating the crypto relief bounce. The exact downside target for scenario B is a direct bleed down to the next major support block at 65,500. Short-term crypto price action is currently a hostage to traditional finance. Tracking the S&P 500 is a mandatory requirement for the next 48 hours. This brings us back to the setups forming on Solana and XRP. The algorithmic relief indicator we are tracking is the 4-hour RSI approaching extreme oversold territory. This indicates that short-term selling pressure has reached mathematical exhaustion. This chart shows the specific support levels being tested during this oversold condition: $84.50 for Solana and $1.37 for XRP. Historically, hitting these oversold conditions triggers an algorithmic relief bounce, but because of the hard macro ceilings pressing down on the market, you cannot blindly long into these resistance zones. The ultimate role for the current cycle is this: the 68,000 downside liquidity is cleared, but until 69,500 is reclaimed, all upside is merely a temporary relief bounce within a ranging market. Knowing the location of liquidity is only half the battle. To complete the strategy, you must identify the exact moment institutional volume enters the market. Click the video on your screen right now to master the exact volume profiling strategy required to confirm these breakouts before they happen.